So most of the time traders have this question, especially swing traders. In swing trading, basically you're betting on a instrument, whether it is stocks, forex, or whatever it is. You're betting on something which is for a very short duration of time. It is more than intraday and very less than the long-term trading. So the entry point is very critical for swing trading. So you all know breakout stocks and everything breaks out at some point of time with volume or without volume. So volume is key here. If you look at some of the stocks which is broken out very recently, so let us say, let us pick a sector. So let's say we pick PSU stocks. So right now they are in trend, they are trending, and let's say pick PSU banks. So if you look at this one, it's Indian Overseas Bank. So we had a bull run, stock nearly doubled during last December, and there was a big slide. So it almost gave up all the profits. So if you see, it's a V-shape pullback. So we don't want to enter this stock. This is what we are looking for. This is not. There was never an entry signal here. See, if you clearly see the stock, this is not even held up for 20-day moving average. So if you see, we have this moving averages here. They are 10, 20, and 50. And some use 21. It's okay. So you can use anything. So let me see. Yeah, I've used 21 here. So 21, 20, and 50. So the violet color or purple color here is 10-day moving average. The blue color is the 21 period, and the orange we have here. That's the 50-day moving average. So we want the stock to trade above all these levels, and especially the 10-day moving average. If it is above the 21-day moving average, it is better. You can place that entry, and there is a pullback. So you don't want to enter on a stock when this just breakout happens. So you want to wait and then enter at the time when it touches the 20-day moving average or the 10-day moving average, which is too strong, especially when the base is very long. See that? So this is where you have to pick up those stocks. So in this case, the base is for over. So you can move to a higher time frame and see how many weeks we have that base. So in University Bank, you can see that, say from February 2022 to almost to October 2022, there is a base. Again, we have another base here, which is like February 2023 to July. That's almost 5 months. So 5 months means 20 weeks. And that's pretty much what we need, a bigger base. So if you can draw this box here, yeah, this is what we want. And we don't want to buy when there is a big move. We want to wait. And even now, I will not enter here because it has shown a very large movement. We will have to wait until it pulls back to this line or to this line. So some can use, some people use Fibonacci Retracement. So they just measure this and this, and they wait until this pullbacks to this level. So 31.32. That's where most people like to enter. So if you look at another stock in the same sector, let's say PNB. So this one, let me under National Bank. Okay. So you can see this is a weekly chart. See the base. This is a very big base. It's a very big base. We have seen here almost for an year, more than a year. So it was go to 45, come back to 35, or even lower than the 30 levels. So now suddenly it broke out, and you don't want to enter here. So it held up the 50 period moving average, which is also the pivot point or whatever you call it, where the stock, normally this is what we call the pivot. So it's the axis. See, just like the ones you see in vehicles. So the stock prices goes round and round, just like the pendulum middle line. See, it goes up, goes down, and all that. So now the pivot is actually changed. Now the new pivot will be here. So if you see, the new pivot is here, 52. Now even higher, it will be here now. So I would say it can come back to 59. So that's when you can enter. And people use Fibonacci. So this is where you can enter. So this is where 0.5 or 0.6. So 60 levels or 50, 62 levels. So you have to wait until you can enter a stock. So that is where pullback entries are very important. And why they are important? Because people who actually have bought it here, they sell it here and it pulls back. And if there is further selling, so if it is not holding up any of these lines, which means somebody is dumping the stock, especially if the volume during the fall is very high. In this case, we don't have much volume compared to the volume which we saw when it was rising. So even in this case, we are seeing volume only when it rises. So when it pulls back, I am expecting volumes to stay below the 20 period moving average volume line. See, this is the mountain you see, that is the 20-day moving average line. So in our case, this can be entry 60 to 62 levels. And if you look at Bell, it's another PSU we have seen most recently. So Bell broke out from this base. It's not a perfect base, but yeah, this is the base. It was hovering between 70 to 85 for a long time. This is a weekly chart, remember. So when it broke out, it did not give much period for consolidation. So when it reached 100, then it was hovering under that region for 4 weeks. And then suddenly it went to 150. And in 2 days, it was back at 121. So if you actually take this as the Fibonacci, if you draw the Fibonacci lines here, I would wait for 112, because we don't have a good market right now. It can fall down, and during the fall, the average the volume is very high, that we don't want. If you look at the chart here, day charts. So here, even when it was falling, the volume was pretty high. That we don't want. There is a lot of selling here. We can wait actually for this one. So volume and price action has to be treated as two important things when you can enter into any breakout stocks. For long-term stocks cannot be as important as other things like fundamentals, but you are into swing trading, and you don't want to lose money in a short period of time. See, another movement happened in Engineers India. So these are stocks which has been neglected for a long period. So it had a base, quite a big base here. So it broke out in high volumes. Even now, this is distribution. Anyone can say this is distribution. Somebody was selling here, and it could actually fall pretty bad. The fall could be pretty bad until this. If there is a bull market, it can easily come to this level, 120 to 130 levels. And if you are entering here, probably you're going to lose a lot of money in a short period of time. And that is why pullback entry is very important. So, whenever you see a stock, don't even have the rush to enter it. So last week we published some stocks in our list, and even TR, you can see there is huge volume here. It can break out on this. This actually, is a very good entry point. And if you have entered here, you have to wait actually the stop loss of this one. So it has a very big base, broke out, consolidated, again broke out. This is a classic example of why you should enter. So this is a flag pattern, basically. See, this is a flag pattern. So they draw a flag like this. Here, so it's a straight line. And the straight line here. Slanting lines. Yeah. So this is flag, basically. There are different names. Basically, it is volatility contraction or squeeze, as in John Cotter's terminology. And Mark may uses a different name here, volatility contraction. So now this is entry. This is a good entry. And if you have missed Thursday's entry here, you can still enter. So this stock provides a good entry point. But if the stock runs up to this level or this level, like it happened last time, those who have entered here, they should be waiting for another year to reach this. We don't want that, right? We want to have more trades in a short period of time, and that's what we look for in swing trading. And for many months, shipping corporation, many months, almost a year, 10 months, it was consolidating in this period, and even right here in this level. Then it broke out. Did not give any of time. It just the market was very fast in the last few weeks. So now when people enter here, they would have to regret. Even now, if you can place your entries here. This is where I would enter 130. So for pullbacks, you can use a lot of strategies. One is the 20 period moving average. The another is 50. Or if you are very in a rush, at least wait for it to pull back near the 10 period moving average. But never buy a stock when it is quite away from all these moving averages. So you don't want that entries in the divergence. So they have to converge and touch these lines. That is nice. So this is a classic example here. For this, see, this it's sorry. It's a channel. Okay. Channels are also consolidating. So when they break out of this channel, they're supposed to give big movements, especially if the volume is high. So, but there was a big pullback. So it touched 250. In 2-3 days, it was back at 200. and who would actually be in such trades. So always be patient. Pullback is patience. So you know the stock, you identified it, and now wait for it to pull back. So Agarwal Industries, we have been talking about this for quite a while. So it is in being base now. Broke out again. Maybe you could have entered here, but never here. Now it is back here. See? And I would enter here, 860 or 870. So, and that too, it coincides with the 50 period moving average. So something will coincide, and if you are doing trades in small stocks, then you should also look at the index. So example, this is for the small caps. It has 450 stocks. And there is another index. This is called Nifty Small Cap Index. There is another called Nifty Mid Cap and Small Cap Index. So it has 400 stocks into it. So this is an index which has 400 stocks. That's quite an index. It has see, if you actually see this from this point to this point, that's a lot of return in 4 months. Since April, this is almost 40% off. So when they were selling here, it fell almost 4-5% in a day, 1000 points, almost 800 points. So that is an indication. See, none of the days in the last 5 months, the index fell 4% in a day. And that means somebody is ready to sell, especially those institutions, the big boss. Now, this pullback, it's the pullback on a fall. So it will touch something here if you draw the lines upside down. So this pullback is time to sell. So mid caps and small caps in our indexes may be bound for a fall, at least to this level, 13,300. It happens so fast that your money erases so fast, and only when it touches this line, 50 period moving average, because it has already touched 20, and I am expecting, since it is a big move, to touch here, and then there will be rebound. So for all your stocks, the entries has to coincide with this. Whichever stocks actually are coinciding in that area, at that time, you should only buy those stocks. You can identify. I have some picks here. I have 10, 15 stocks identified. Near Utilities is one stock. Big base here. You see, this is big base, weekly. See that? In hindsight, if the stock happens to move so fast to 1000 levels, this will appear very small, and you will really see this as a consolidation. 300 to 500 for many months, almost February 2021 to August. You see, 2.5 years. That's consolidation. It broke, it almost gave 50% return. Now, in 2-3 days, in 1 week, it has lost more than from 8 to 14, it went to 8,657. That's 20% retracement, pullback. So now we want to wait until it reaches at least this point, 560 or 470. It will happen. And see, in this case, I would actually enter at 540 or 530 dollars. And that will coincide with this index. index will touch here mostly. That is how it works. So pullback entries are very important, and pullback is patience. You're going to do it, just delay a bit. Okay? So it's like crave for something, but you don't eat it immediately. Wait. Delaying gratification. That's what pullback is all about. So pullback entries we will identify when it happens. So these are videos which are like I can pull out down stocks have honored these pullbacks, especially when it is a bull market, and people just anything will fly, anything, everything will fly in bull market. And if you're stuck for a very long time, you are stuck in a stock like this one, it has tripled in like 2-3 months. And if your entry is strong, you'll be stuck there for a very long time. And there are few stocks in this sector like Garden Reach Shipping and Cochin Shipyard, but this one moved up and they are just waiting, and you don't want to enter any of them right now because the market has gone too far. You want to wait. You can see this. Okay, it is also rising, but let's wait. That's more important because pullback entries are very important. And if you want to make good money consistently, you don't want to buy those big bars, lengthy bars, long bars. Those are bars which are meant for selling, especially when they are away from the moving averages. It indicates almost the peak of buying activity, and the selling starts. So let's wait, and then we can enter. You will get entries. See, in this market, the stock like idea has given 30% return in almost 2-3 weeks. So we don't want to be in that market. We want to slow down, let the market pull back, and then we can make entries. There are many examples. So this should be enough for understanding what is pullback, and we will come up with some videos, more videos with more examples on pullbacks when they happen and how we make entries. We'll let you know. We'll trade together on those stocks. Anything is okay. We don't want to give up names. Whatever names we discuss it, it's just for the general audience. We don't want to tell them that the stock will move and all that. There is a chance. There's always a probability. It's a probability game. So pullbacks are the best way to best process. Pullback entries are very important, and if you have a process in place, if you honor the stop loss, you will always make profits consistently. We believe that strongly. I believe it strongly. So let's talk about more such points, more such phenomenons, more such strategies, and I want to know at least if there are 100 people who listen to this talk, 80% should make money consistently. It is just sharing knowledge. So I would actually welcome comments, both positive and negative. We'll actually come up with videos which are more beneficial to general audiences. Thank you very much. And if you like the video, please click on the subscribe button. See you in another video. Thank you.